we're looking at, I think, a starting switch point where bad news means recession. And the recession is even worse this time because the Fed cannot cut rates and print money as aggressively as before. We're looking at a scenario here by the fact that we're seeing Bitcoin have struggled here. Even when the U.S. stock market was ripping higher, we saw the dollar collapsing yesterday, breaking a key trend line. Bitcoin's not breaking out here. What's going on?
The US dollar is not having it good at this time. It's continued to slip downwards recently. This would have huge market implications as investors seek where to invest their money safely. Is this the chance gold investors have been waiting for? Gareth Soloway thinks gold is set for a rally, but that rally would be affected by Bitcoin, which is giving investors an alternative. Which asset is really worth buying now? Is there hope for the US dollar? You increase your chances of interpreting the markets and economy better when you subscribe to this channel. Do this now because you need all the information you can get as the economy slips into critical times.
ADP private sector came out 8:15 a.m. Eastern time, came in at 145,000 jobs created. That's private sector only. That's not the big jobs number coming up later this week. That's just the private sector. Now investors were expecting 210,000. So it was a weaker number than expected. Now, what does that mean? Well, weaker number initially is good news, right? Because it means the Fed may hike less. Maybe they'll even pause at the next meeting in May. However, this is the kicker, guys, and this is something I have said for a long, long time, is that bad news will eventually become bad news. Now, why the heck would the Fed stalling out on hiking and maybe even pausing rates, in terms of hiking, be a good thing? And the answer is, or bad thing, I should say. And the answer is very simple. It tells you the economy is slowing. As long as inflation's above 2%, the Fed cannot cut rates. Okay, so again, there's this lot of hype out there, people hoping and praying that the Fed will cut rates. It is not going to happen. Jerome Powell has said that to the nth degree, that he is not going to cut rates because he doesn't want to repeat what Paul Volcker did in the 80s, where he cut rates too quickly and inflation roared back exponentially fast. So again, guys, the bottom line is you're starting to see the futures actually weaken a little bit on that slightly worse than expected jobs number. Now we'll see what the jobs number is in the coming days for the non-farm payrolls report. But the bottom line is we're looking at, I think, a starting switch point where bad news means recession. And the recession is even worse this time because the Fed cannot cut rates and print money as aggressively as before.
It's a bittersweet situation for everyone, but most investors want the Fed to cut rates to ease constraints in the market and the economy. This hope should be forgotten, and this is according to JP Morgan's head of institutional portfolio strategy, Jared Gross. He said that the Fed had not clarified any potential pivot or the signal that would lead them to pivot. And yet, the bond market does appear to be expecting a fairly rapid turnabout. Unemployment recently reached its lowest level since 1969 in February at 3.4%. This should be seen as good news, but that's not what the Fed hoped for. Jerome Powell had been hoping for employment to weaken, so even though he saw that jobs weakened slightly in March, it's not likely to be enough to cause a pause in the rate hike. The rise in popularity of generative AI is driving some interest and investment into the tech-driven market. So is this market safe? Gareth talks about this next.
In my personal opinion, I think the markets are very close to a major pivot. I've done calculations. I've looked at cycles. We're very, very close. Going into next week, we may see a sharp turn lower in the S&P 500. All right. And again, you're starting to see weakness in things like the semiconductors. Take a look at NVIDIA today, guys. NVIDIA, which number one, I pounded the table on this short trade. I said, guys, this level up here is epic resistance. Not only do you have this trend line, you have this trend line, you have this trend line, all of them converging in this 270 to 280 range. This to me is a short. Today, NVIDIA is dropping. Let's take a look at the real-time action on NVIDIA in extended hours. Look at that, 269. So you're down about $5 on Nvidia this morning. This is, to me, just the beginning of a bigger move to the downside. Now, listen, Nvidia is going to have bounces. It's one of the favorite stocks out there. Investors just love this. AI, all this other stuff. By the way, is AI something that's going to impact the stock in the next 6 months? Are they going to all of a sudden start printing money because of AI in the next 6 months? No, the answer is no. This is a long-term story, a lot of companies, but the bottom line is it's helped drive the stock price up. For us, it drove it right up into resistance. I couldn't ask for anything more. Thank you very much. Emotion. And I say emotion because the talk of AI in any stock gets people rocking and rolling. Greatest example of that would be the symbol AI, which is this company, C3 AI. Again, we've had a monster move. Look at this. When AI started to become popular, it was trading at $10. It runs to 30. Then it pulls back. Then just a couple days ago, it runs to 35. Today or yesterday, it pulled back on the back of some accounting issues that a short seller raised on it. Whether or not they're true, I don't know. But the stock was overbought, so it makes sense that we would see that pullback.
In the midst of all of this turmoil, some companies are doing well. One such company is Nvidia, the leading chip maker for AI applications, which has seen its stock soar over 80% from 2022. But some analysts warn that it's overvalued and faces stiff competition. Nvidia is likely to face stiff competition as competitors such as Intel begin to play a bigger role in chip development. If Nvidia fails to deliver on its high expectations, its stock could plummet and drag down the entire tech sector. Adding to the bearish outlook is Jeremy Grantham, co-founder and chief investment strategist of GMO, who expects the S&P 500 to tumble by 50%. He said that the US is experiencing its fourth super bubble in modern times, which is worse than the previous ones in 1929, 2000, and 2008. He revealed that he's betting against the tech-heavy Nasdaq index and junk bonds, as he sees no signs of stable recovery. Okay, growth stocks, tech stocks, and the equity markets are currently hanging on a cliff. This should be an opportunity for traditional investment hedges such as gold, but Gareth fears that Bitcoin would slow the price rally of gold this time around. Let's listen to his analysis.
I am now isolating down about a $2,300 price target on gold by year end. I think, again, I've showed you guys this in the past, and I think it's remarkable. But if you go to the 1970s, you had a 9x on gold from the lows of the consolidation. Now, we're not going to do 19x. Let's not get fooled by that. All right, 9x was in a world without Bitcoin, without a lot of alternatives for investments. Do I think we can do a 3x? Yes. Do I think we're going north of 5,000 over the next couple years? I absolutely do on gold. But Bitcoin will take some of that up. Speaking of Bitcoin, let's go to it because we have some big stuff to discuss on Bitcoin. So Bitcoin, again, guys, continues to hammer on this upper level. I'm going to tell you this. You now have 3 days left. 3 days left to break out. If you don't break out in the next 3 days, you should see a big sell-off next week. So ticking, 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 tick-tock, 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 right? We're looking at a scenario here by the fact that we're seeing Bitcoin have struggle here. Even when the U.S. stock market was ripping higher, we saw the dollar collapsing yesterday, breaking a key trend line. Bitcoin's not breaking out here. What's going on? Well, needless to say, it's at a pivotal level. Literally for the last month, I've been saying, guys, watch the 28,500 to 30,500 level. That is your major resistance level. That is the biggest level in Bitcoin, the biggest by far level in Bitcoin. All right. And again, that's the key here to understand that that is your level.
The price of gold soared to a one-year high above $2,000 per ounce last week on Tuesday, as investors flocked to the safe haven asset amid rising geopolitical and economic uncertainties. Gold gained 1.6% to settle at $2,021.40 per ounce, the highest level since February of 2022, when it touched a record high of $2,067.15. Some experts predict that gold could surpass its all-time high and reach $2,500 per ounce by the end of the year, as the supply of gold remains constrained and the central banks keep their ultra-loose monetary policies. Some also see parallels between the current situation and the 1970s, when gold rose from $35 per ounce in 1971 to $850 per ounce in 1980, a 25-fold increase. Back then, gold benefited from a combination of high inflation, low interest rates, geopolitical turmoil, and a weak dollar. Some of these factors are present today or could emerge in the near future. For now, the rally has slowed down as gold continues to fight for the center spot with the dollar and cryptocurrencies as a hedge against a market crash. If you want to see more market updates and analyses like this, you have to subscribe and turn on the notification bell. And of course, be sure to give this video a thumbs up. We'll see you in the next video.